I'm Charlotte McLeod with investingnews.com, and here today with me is Lynette Zang, founder and CEO of Zang Enterprises. Thank you so much for being here. Really good to have you.
Well, it's good to be back with you again, Charlotte. I always enjoy our conversations.
I do as well, and I've really been looking forward to this one. I think we have a lot to go over today.
Yeah.
Where I wanted to start is with gold. So, gold has been on quite a run this year, even since we last spoke all the way back in May. And when we had that discussion, you had mentioned there's so many things going on with gold, but the move, which was, I believe, just breaking out at that time, was primarily due to technical reasons. So, I thought we could start by taking a technical look at gold and what you see in the future from that perspective.
Well, quite honestly, I see a squeeze coming up because the all-in cost of mining has really been spiking. And so, yes, the spot price has also been rising. You know, nothing goes straight up and nothing goes straight down. You're always going to have some bounces along the way, but it looks like there's some really nice support levels. So, I anticipate, we'll see, but it wouldn't surprise me to see the spot market break 3,000 by the end of this year. And, even in silver terms, silver has also been doing quite well, the spot silver contract. But to see it conclude its cup at somewhere around $50 would not surprise me to see either one of those things happen by the end of the year with everything that is going on on so many different levels.
There really is such a lot going on, and those numbers, even though they are quite high, definitely seem attainable in a relatively fast time frame, I think. I wonder if you could talk a little bit more about those rising costs for the miners, because I think that might be something that people overlook sometimes when they see the price of the metals going up. They think, of course, the miners should be doing well, but they've got to deal with this as well. So anything you would add there?
Well, yeah, I mean, inflation impacts everybody and everything. So when you're seeing it, a nice steady rise, that's why central banks like that 2% target, because the inflationary target, because they get what they want, but it happens so slowly that people don't notice it. They don't take it into account. Well, the inflation, again, has an impact on everything with mining. And actually, Charlotte, you probably know more about those all-in costs of mining than I do, to be perfectly honest with you. But I know how to read a chart. And when I see those costs go up like a hockey stick, I know there's a lot that's going on between energy and labor and many other factors that go into pulling the gold out of the ground and then refining it in a way that it's useful in all the different segments where it's used.
Right. And it's pretty interesting because also since our last conversation, finally we've seen the Fed make its very long awaited interest rate cut. So they're cutting rates. They're feeling, I guess, all right about inflation. So what's going on there when we still have costs so high? I know you've been warning us for quite some time about a hyperinflationary scenario that could be coming.
Well, frankly, it's not just the U.S. and they want you to think, the Fed cut the interest rates by 50 basis points. And they want you to think that that's like a good thing. Like the Bank of Canada just did the same thing. And the way that they're spinning it to the public is we are going to stick this soft landing. But in reality, what that really shows is that the central banks fear the debt wall. They're using employment as an excuse, but you cannot turn a ship in a thimble of water. And what I mean by that is from the moment that the central bank issues a policy statement or goes for some kind of changes, it takes 12 to 18 months to trickle through to actually have that impact. So when we're seeing these moves from these major central banks and the Federal Reserve and the Bank of Canada, they're not just the only ones that are doing this. We're seeing this all around the world. To me, what that has done is it has announced that the global central bankers are actually ready for the hyperinflation, the more rapid inflation. And we've been getting those indicators with the quick inflation that we've all been experiencing on a global basis. That also helps make corporate profits look better, right? Because they get to charge more for their product, sometimes to the pace of inflation, and what we've seen a lot of times not. And so, really, I think that the single most significant thing since the last time you and I have spoken is the fact of watching these global central bankers drop their interest rates a half a point, 50 basis points, because what they're trying to do is inspire more inflation when they haven't beaten the inflation that they created to begin with. But they're calling victory. But that's more about perception management than reality.
Yeah, this is very interesting to watch and very, very good to point out that this is happening in the US, but also elsewhere. And I appreciate the mention of Canada since that's where I am right now and many of our
Right.
audience as well. How does this play out? So we have these central banks, including the Fed, coming back down with rates. How does this play out further into 2024, into 2025?
I think I can't guarantee anything other than I'll show up and do the work, but my bet would be that we will see inflation start to rise more rapidly once again as corporations. And we're going to see that inflation, make no mistake, we're going to see that inflation not just in the cost of living, but in the stock market and the real estate market. And that's what they're trying to do is everything is so severely overvalued that the natural tendency is for the prices come down of its own weight. But the central bankers are not prepared to fully deal with that deflation. That's their bigger fear. And so what they have to do is they have to create more rapid inflation or inflation, period. I mean, it makes it simple. Only one way to fight deflation. That's with inflation. Only one way to fight inflation. That's with deflation. But, you can't fine tune it, and we're out of time because on a global basis, again, we are out of purchasing power to inflate away. That's the real problem, right? That's the real problem. They've already inflated away all the value of this stuff just by doing this, because that's the only thing that they really have is printing money, and they regulate that via the interest rates. And so, yeah, they increased the interest rates by a substantial amount to slow down the borrowing and spending. But the environment, the investment environment never really got tight. I don't care what they blah, blah, blah say. All you have to do is take a look at the shift from banking into private equity. Take a look at all that money that they created since 2008. That's still sloshing around in the system, right? I mean, that didn't evaporate. And so you're seeing the central banks. This is the part that scares me, because the environment is already so loose. The investment environment is so loose, so overvalued, and now they're dropping the rates to make it even looser, which I could be wrong about this because I don't know this globally, but from the data that I've read, this is and looking at the charts at the FRED, the Federal Reserve Education Department, this is the first time that the Federal Reserve has dropped interest rates this far into an already loose environment. That's pretty significant.
Wow, I think definitely it is significant. And I want to take a moment to address the US debt, because you mentioned this wall of debt that's approaching. And I saw what I thought was an interesting headline, I believe a few days ago. It was essentially saying for the 2024 fiscal year, interest on the debt came in at 1.16 trillion. This is the first time it's been above the $1 trillion level. So these are massive numbers, and it feels like we keep getting even more massive numbers on the debt. And yet it doesn't seem to be much of a concern for most people. So is there a level, do you think, and maybe this is a silly question, where people look at it and say, this is a problem?
Well, I think we're already there. when you're looking at all of the social programs being so severely in deficit and the level of deficits, I mean, truthfully, whether you're a government, a corporation, or an individual, the laws of economics works for everybody. The difference is that our governments have this. You and I, if we do that, we're going to jail because, hey, we are not going to infringe on their money-making, monopoly. And by the way, can I please point out that it basically costs the same thing to print this as it does to print this. And yet you and I have to work that much harder for this. So the tipping point has already been reached. And in reality, the way that you and I know this, okay, I mean, it's actually pretty simple. It was back in the end of 2000, I believe it was 2000, maybe it was 99, where the Federal Reserve had to buy back the government issued debt. That is what a third world country that nobody will buy their debt, that's what they do. And it was dead silent on that. Nobody talked about it, but you can go on the Fred and you can see it for yourself. So we know that that's what happened. So we were already issuing way too much debt. And I'd also like to point out that 1.6 trillion in interest, what people are not understanding as well. And I did this study, God, back in 2009, because I was like, well, wait a minute. If you look on the deficit and surplus chart, again, at the Federal Reserve, so these are official numbers, you'll notice that we were running very small deficits up until the great financial crisis in 2008. And then it got ginormous in excess of $1 trillion. But I'm like, well, gosh, the deficits don't look that horrendous leading up to this. And we're at $1 trillion in deficit now. Why are we servicing 13 trillion in debt? So you can go to the data behind that, the spreadsheet behind that. And what you find is that we were compounding interest. So that difference between it. So when they say 1.6 trillion, well, they're not counting the compounding interest that is probably somewhere like 31 trillion or more, right? I mean, this is just what we know about, but quite honestly, there's so many easy ways and accounting fixes to go around what you and I, the public, ever see or understand that, you can only take these numbers with kind of a grain of salt and then understand that they're much bigger than what we're looking at. That's pretty, we aren't seeing any of that. So that's just that's the tip of the iceberg that we're seeing. And I think we've already reached that critical mass.
Yeah, yeah. Go ahead.
No, I was just saying that was the long answer for the question. I'm sorry.
No, it's very tricky to follow, and I appreciate you going into detail on that. I've got one more question on the US, and then I'll move on to something a little bit more global. I noticed, I believe last week or so, we did have another bank failure in the US, this time in Oklahoma. Right. So I wanted to bring that up to you and just check in what's going on there. Should we be worried? Is this the start of something, or is it maybe more of a one-off there?
Well, they want us to think that it's a one-off, but I was reading an article in the American Banker, and I have to dig into that a little more because I was basically occupied this weekend, and that bank failure happened on the 18th, where they shut it down. But I think that it speaks to a much bigger issue, goes back again to that debt wall, which is really a global issue, and all of the corporations and governments that have to roll over debt that they can't afford at this level that they took out at much lower interest rate levels. So it only adds to the woes to be honest with you. No, I don't believe that this is a one-off event. Even the American Bankers Association doesn't believe that this is a one-off event. But I think that they're also slowly getting us used to bail-in, because when this happened in 2023 with Silicon Valley Bank and First Republic and those other banks, they made everybody whole, the FDIC, uninsured deposits as well as insured deposits. This time they're making 50% of the uninsured deposits available and saying, well, if we gain any extra money from the sale of the bank's assets, then maybe we'll give more to the uninsured deposits. But I think that that is a big change between the previous banks that we've seen, and it's kind of easing in. Let's see what the reaction is, because that's how these things work. They're going to test it in some place. It's just a small bank in Oklahoma. Who cares, right? So they're going to test it over there. Let's see what the response is, just like they tested the bail-ins in Cyprus. That's in Cyprus. That can't happen here. Well, that was a test, and the whole world responded by saying, what about deposit insurance? What about deposit insurance? So we're going to see what happens to the response in them only giving the uninsured deposits 50% of it, because we know that they've already, meaning the FDIC, is already in reform mode. But make no mistake about it, they know they're going to be depositor losses, uninsured depositors, and they know they're going to be bail-ins. So you have money in the bank, and here's a bunch of stock in a failing institution. Whoop-de-doo.
Okay, I think that gives us a pretty good idea of some of the issues that are going on a little bit closer to home. And I said I would look a little bit more broadly as well. So I also want to bring up the BRICS meeting that we have going on, I believe right now as we speak. So so it's in progress right now. Hopefully we'll be publishing this before it wraps up. But what are you watching most closely there? Have we heard anything out of there yet?
Well, we've heard a little bit, and that's about the relationship and the more solid relationship between Russia and India. So, they've come to some trade agreements, and that's really what the BRICS is about, is creating a unified trading partnership with that cross-border, so that bilateral trade in the internal currencies. I haven't heard anything about the BRICS currency yet. And if that's going to be a unit, then I think people really need to understand that that's going to be a pegged currency, not a backed currency. And I think it's significant that people understand the difference between the two, because Zimbabwe, right, in their infinite wisdom and attempt to regain the trust of the public, said that their new currency, the Zimbabwe gold, was backed by gold, but it wasn't convertible into the gold. It wasn't backed by it. It was pegged to the nominal price of it, right? So that's the difference between those two. And from what I can see from the BRICS currency, and we'll see, they're talking about having a basket of currencies like the SDR over at the IMF. It's a basket of currencies with a component of gold in there, a certain percentage. But quite honestly, unless it is convertible, it doesn't mean anything, just as we've seen with Zim Gold. When the pressure was on and the adoption of the new currency wasn't going that well, they had to do, and so the pricing was different in the black market than in the official markets, and it got wide enough, then they had to do that overnight revaluation. And let me tell you, if a currency is truly backed by gold, you can't do that.
Right. I think a lot of people have questions about what this BRICS currency is going to look like in the gold component. So that helps a lot. So from what you're saying, how impactful could this be for gold, really, if it does eventually come to pass?
Well, I think no matter what is happening, what we are in right now is a currency reset. And this is a topic that I've studied since 1987. So in all life cycles, it's a currency life cycle issue. So that means that we will see gold and silver both, because gold is the primary currency metal. Silver is the secondary currency metal. This is a currency life cycle issue. And so you will see both in terms of fiat money, you will see both of those continue to rise. And even when I talked about $3,000 on gold or $50 on silver, I'm talking about the spot market contracts. I'm not referring to their true fundamental value, which is the value. Here's a guarantee I can give you. And it's not because I'm saying it, it's because it's happened 100% of the time. At some point, all assets, all instruments move to their fundamental value. In terms of this stuff, that number is a big fat zero. I mean, here's this, I've got a $10 trillion Zimbabwe note. It has absolutely zero value, but I'm a zillionaire, right? Or trillion. I'm sorry, I'm a trillionaire. So we get blinded by these numbers, but the reality is we are in this transition, and you need sound money that is in your possession, because if you don't hold it, you don't own it. Everything else is just a contract, and any contract is only as good as the counterparty to that contract. But according to the Bank for International Settlements, gold is the only financial asset, not one of two, not one of five, the only financial asset that runs zero counterparty risk. So in terms of the fiat money, as these currencies continue to die, as we go into hyperinflation, as we've seen over 4,800 times, okay, in terms of this stuff, yeah, those zeros can keep going on. But that only has a positive impact on gold. And may I also say that the way they do those overnight revaluations, like we just saw in Zimbabwe, is they take the currency that has no intrinsic value. It is used in one place in the financial system. That's it. Other than that, it's just a tool of barter. And they revalue it against something that is all intrinsic value, because it is used in every single sector of the global economy. They revalue this against that, and then gold on the spot market will rise initially somewhere near its fundamental value. It won't be over yet, but it'll start that journey. So whatever Wall Street is saying right now, that's fine. They have a job to do too, which is to keep the price suppressed and make an attempt to keep people away. But it's a little challenging with the rise in the gold price, in the cost of mining, right? Which is an asset that's used in every single sector of the global economy, has the broadest base of utility, the broadest base of demand, right? We're going to have to keep mining it. The pricing is going to have to go up because miners aren't going to mine if they're losing money. Can't afford to do that.
Okay, and on the note of holding gold and silver, I wanted to check in with that because we had somebody write in with a question. And
Okay.
I know from our previous conversations, you prefer for gold coins the pre-1933 coins
Mhm.
because these are less likely to run the risk of confiscation. But we
Mhm.
had somebody write in and they asked, how can you feel secure there? Because the rules can always change. How do you know the rules won't change again this time? So any thoughts on that?
Oh, yes. Number one, I can't guarantee that the rules won't change. However, This is also the point of being in that area, because you'll have a coin like this. I mean, this is not that rare a coin, but you'll have a coin like that that might go for $15 million, $20 million for 1 ounce of gold. Well, let's see, who can afford that? Likely those that either write the laws, like Treasury Secretary Wooden the last time gold was confiscated in the US, or those that have the ability to influence those that write the laws. So just like they will with the bail-in, they're using the eminent domain laws that say that they can take anything they want. They just have to pay you, quote unquote, fair market value. Well, this is an American Eagle, right? So this is a piece of bullion. And this is more guided by that spot market. So it kind of straddles a contract market as well as a physical market. And when demand exceeds supply, even though the pricing may stay whatever, go down or whatever, you'll see the premium shift. But this is what most people will do because it seems cheaper. And people are, well, I don't want to pay the premium, except that this is also what people hold inside of IRAs. You cannot hold these inside of IRAs. I don't know why, because they're the same, especially on the raw level. Here's a 1 ounce raw gold coin pre-33. I can't hold this in there, even though they have the same gold content and it's all standardized and everything. But this I can. And that's because when the spot market, they can manipulate the spot market. So they can create that fair market value any way they want. Now, having said that, I do need to point out that this 1 ounce gold coin has a $50 face value. So some think that the confiscation would happen at $50 an ounce. I'm not one of those because they would get too much pushback. And they know the currency has no value anyway. So what they're more likely to do, in my opinion, is let's say that happens with spot at $4,000 an ounce. Well, they'll pay you $5,000 an ounce. And most people not understanding that that spot contract is just an illusion. It doesn't really reflect the true value. Just like back prior to 33, people will look and go, well, wow, how nice they are. They're willing to pay me $5,000 when it's really only worth $4,000. Okay, they wouldn't get any pushback. But the guy that spent $15 million on this coin is not going to turn it in for $5,000. So this is the category that I want to be in. And I just recommend to everybody, go into the IRS laws and look at what you can hold inside of an IRA. If you can hold it inside of an IRA, I'm not buying it. It just gives me, and that little premium, because I guarantee you I did not pay $15 million for this coin. But that premium is my wealth insurance. That's the way, I mean, gold in general is your wealth insurance, but that little premium that I pay for the collectibles, even the raw, right, which is, this is what I use for my emergency money because I have to pay salaries, etc. So I want to make sure that's not a problem. That to me is my wealth insurance, and I'm happy to pay that premium just to make sure. What if I'm right? What if I'm wrong? If you're holding bullion, you better be right. If I'm holding a collectible, doesn't matter whether I'm right or wrong. I'm in good position either way. And I didn't pay above fundamental value.
And does the same hold true for silver coins as well? Do you have preferred coins in silver?
Well, I don't have the same level of concern over the silver confiscation because silver gets used up in industry. And it, even though is the secondary currency metal, it is more, and gold is used in all industries as well. This is used more. So I do have preferred, I like the constitutional money, the pre-64 dimes, quarters, half dollars, and dollars, because I want a variety of sizes, right? And I have a tendency to like the smaller coins. I have all of them, but I have a tendency to like more of the smaller coins because it's easier to put 2 dimes together than to break a $50 or a quarter in half. But I also like it, and actually this is true for gold as well. I also like it in any form. And I think that's important for people to understand because, I mean, I picked this stuff up at yard sales. Now, not so easy to do anymore because more people are aware of the price of silver and that it's going up. But, you know, you can still go to scrap dealers. I mean, there are lots of ways to accumulate gold and silver at whatever budget you have, right? And whatever you can do, because gold and silver at their base are monetary, no matter what the condition can be. And I wouldn't mind, you know, taking a clippers and cutting off a piece of my chopstick if that's what I needed to do.
Yeah, I always love how you make it seem very accessible for really anybody to start doing this. So I think we've
Yeah.
covered quite a lot of ground in this interview, gold, silver, global events. Are there any final thoughts that you would leave investors with? I'm thinking probably our next time talking will be in 2025. So thoughts for the end of 2024.
Yes. Well, yeah, I do. And I think that I learned this, I realized this last year, and it just gets more and more and more important. You know, I think it's critically important for people to be as independent and self-sufficient as possible. And that means that we need to create security in food, water, energy, security itself, barterability, wealth preservation, community, and shelter. And arguably, community has risen to the very top of my list for a couple of key reasons. Number one, I've been doing just what I talked about and developing my mantra since 2008 when I knew the system died. We don't have that luxury of time anymore. We are at the absolute end. I can't tell you the exact moment, but you better be prepared before that exact moment comes. And I believe that the only way that we're going to be able to create that security, especially if you haven't started yet on all of those areas, is by coming together in a local community with like-minded people that you share your talents and whatever you have to bring to the table. So, you know, understand that even though silver is my favorite form of barterability, any talent you have, any skill set that you have, any food that you have, anything that you have, even just another body because there's strength in numbers, we've got to come together in community. And the best place I think to start is with your neighbors. Meet your neighbors, become friendly. They don't have to even think the way you think if you understand what's happening, right? But be friendly so that you can come together to help each other. Go to a farmer's market, go to a local community garden. When you're at the farmer's market, meet the people that are growing your food and give them a day of your labor. You'll learn new skills. And I guarantee you there's always something to do on a farm, but you'll create that relationship. So I cannot stress that enough because it's how critically important it is. And people in the cities, in the country, wherever you are, you can do that. You can create that. And then also we need to come together on a global basis in order to, as much as we can, ensure that the new currency system that comes out has a convertible form of gold as a component of it, because that is the only way that the public can take back their power. And that's what we have to do. We have to take back our power because this is the only way. If you don't like what that government or that central bank is doing, you can walk in with one of these and you can walk out with one of these, and that creates restrictions. So we are going to have a much more fair system. Hold your purchasing power intact. And we have the power back. That's what I can say. So if we can get 3% of the global population of 8.4 billion people, then we got a shot, I believe, of having a seat at the table. And if I'm sitting there representing everybody else, I will be fighting to have a convertible, because if it's not convertible, they can call it back. It doesn't mean anything. You have to be able to hold these guys accountable. I'm going to close with this because I know I've been like long-winded. I'm sorry, Charlotte. But when I was doing some recent work in Zimbabwe, I saw a group of protesters were holding up this huge sign, and it really struck home to me because it said, "But what can I do? I'm just one person." It said 7 billion people. Yep, I'm just one person. I can't make this happen, but I can if we can get 3% of there's actually 8.4 billion people in the world. Now we are a power. And where there are more of us than there are of them, we can have a voice. At least that's what I'm fighting for.
Okay, I think that's such a powerful message to end on. Thank you so much for taking the time to talk today. And I hope to check in with you again soon to see what developments have happened. Really good to have you. Thank you very much.
It's been a pleasure. Thank you for having me, Charlotte.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Lynette Zang with Zang Enterprises. Thank you for watching. If you like this video, make sure to hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.